How's it going, guys? Welcome to the MIT, the MIT. This is Hiram. We're just getting started right now because the LIT just ended, and so now we pick up on the MIT. Awesome. I appreciate it, Brad, because we're going to jump right into this sucker. So we'll review these. Good morning, Chris. We'll review these in a I'm already out of that one. Okay. And that one. Dang it. I was trying to review some of these with you guys. Hold on a second. Okay. Let's go. So I went long on the GJ and GU for 5 pips at the top of the hour, and I'll show you guys the read here in a second, and then I'm still in a long for the EU at the top of the hour. I was hoping to show you guys what we were doing before we got in so you guys could, mimic this in your demo account, but we'll go over it in just a moment. So I'm going to let that one resonate for a moment. Let's go over some announcements. This trade is for educational purposes only. All information given is speculative and involves risk. This trade should be examined and taken from a personal evaluation. All attendees agree by watching that any trades he or she takes was of individual influence based on personal evaluation of the market. This webinar's intention is to demonstrate a method that can be used to help make an evaluation of the current market. No past, present, or future incomes have been made or relied upon prior to or during this meeting. Any redistribution or recording is strictly prohibited. This webinar is for members only. Yeah, Brad, that was a dirty pressure, so that's why I took that one. Good call on that one. Nice. Let's see how that one works out for us. 2019 is a year to make serious money. Try day trading for only $39.99. Here's a coupon code, save 456. Take advantage of this month's Trader Lite promo. Ready for coaching? Don't miss out on upgrading this month while supplies last. Upgrade and get the following: Pro Funding, free trading laptop; Premium, free trading laptop plus $100 off, 1 extra week of coaching; and Executive, you're going to get free trading laptop, $500 off, and 2 extra weeks of coaching. Supplies are limited, or promo will end once laptops are gone. All laptops are preloaded with our top coaches, chart books, and tools. We have 2 new webinars. Obviously, you're attending one right now. The light members and then the advanced members for the MIT. So light members for the LIT. By the way, advanced members, you guys can and are able to attend this LIT training. It's cool stuff, and it might be stuff that you guys are not familiar with. Brad is actually commenting on one of them. They're going over one of my setups, which is actually they're going over all my setups, but or all the setups they go over are from the Proving Ground. The light impact trade starts at 7:30 Mountain Standard Time, and then the advanced, which is the MIT morning impact trade, which is what you guys are attending right now. Both webinars will be held Monday through Friday. So go to the calendar and register for those. If you guys are, obviously you guys are here, you guys are advanced members, so this is for you guys both. Light members obviously are not going to have access to this particular webinar. Corporate funding: if you completed your 9 to 12 weeks of coaching and feel ready to go live, please send an email to golive@mytradesupport.com requesting a real money review. Everyone gets funded, so you'll receive an email with questions to answer and documents from DocuSign to sign. The account can generally be funded in about 2 weeks from when you provide the needed information. All upgrade payments must be paid in full, along with all signed receipts, and payments for indicators must be current and active. Interested in starting a business with us? We're experiencing record growth. Learn how many of our partners make over $10,000 a month in our growing business. Darcy Wall is the woman to speak to. Darcy@mytradesupport.com, or just text her 801-380-9475 or give her a call. And Mastermind, if you guys haven't heard, the Proving Ground Mastermind gives you access to advanced indicator training, best practices of professional day traders, alerts sent out 10 to 15 times a day with trade setups on 15 plus patterns, some of them with upwards of a 90+% win rate. Exclusive expert advisor programs for MetaTrader 4 for watching your trades or for gathering data, so on and so forth. Tons of stuff. Access to the risk calculator, the golden ratio analysis, which is an algo that my partner and I came up with to help you guys set up a more robust stop loss or hedge process. So access to live and recorded webinars. All of our webinars are recorded, and we upload them so you guys can watch them on demand. So you must be upgraded to coaching and current all membership fees, which is true of this group. All of you guys are upgraded, so all of you guys are eligible to join the mastermind. So for more information, email info@daytradesmart.com, and we'll give you more information on that. Trader Tax Pros, James Tracy. Give him a call if you have any tax questions. 801-458-1517. All right, let's get to it, guys. I rushed through that. I'm not going to be doing this this webinar very often, so if at all, just because it's so early, and usually I'm getting kids to school at this time. Maybe in the summer I'll do more, but right now, where it's school season, I probably won't. It's not likely that I'll be doing this. Right now, my son is actually off of school today, just for today, and most of my other kids. So Ashley asked if I would do it today, and I said yes. All right, let's go over some stuff here. I was told I couldn't get on the LIT by the office. That shouldn't be the case, Morgan. Let me find out for you, but as far as I knew, upgraded members can get on the LIT, but light members could not get on the MIT. Do they actually take a trade during the LIT? Rennie, yes. If they see the setup, like for example, we had a dirty pressure setup here a moment ago, and so if they saw that, they were going to take that long at the end of their webinar. And I'll explain to you guys what that dirty pressure setup here is here in just a second. Russell, shoot us an email. It's info@daytradesmart.com. My people just send you a whole thing on how it works. Okay. Let's go to the three things that we saw really quickly. So at the top of the hour, I saw some things setting up, and I know this is only a 30-minute webinar, so I wanted to get in, a few trades. So I just figured I would just pick a few 5-pip trades. I knew the Euro US might take a little while, so that was a good pick. But the GJ and GU, I was hoping we can jump on quick enough and just put the trade before the announcements, just so I could show you guys what the entry was. But they filled in like seconds, so I didn't really get a chance to. So let's go over it now. Right now, I'm in a Euro USD trade long for just 5 pips. We just filled the GBP JPY. You can see our entry was right there at the very end of that candle, and then it came up and filled right there for just 5 pips. So our entry was at 16.59, and we filled at 17.01. And then our GBP USD was kind of the same thing, 16.59, and it filled at 17.01 in 33 seconds. So the GJ filled second at 17.01 and 56 seconds, and then the GU filled before that at 17.01 and 33 seconds, or 33 splits, whatever. There was just a very few, less than a second difference, or no, that was a second, sorry, just less than a minute difference between each of those fills. And then we've got our EU right now, Euro US in play for 5. So let's figure out how we got to those, how we decided to take those particular trades. So let's start with the Euro versus US dollar. The Euro US dollar was based on just the dirty pressure setup, and simply put, the dirty pressure is when green pressure changes positions. So you can see that if we go back just one candle down here in pressure, okay, if we go back just one candle, we can see that green is on bottom of red in pressure. Now on this candle right here that just ended, green popped on top of red. And when green is on top of red, we just want all 4 of these lines to point up. I don't care if they're oversold in the channel, overbought, as long as all 4 lines are pointed up. And then we'd go for 5 long. And we'll just, we'll talk about like a 15 pip stop. If you guys want to jump in on that one, that's fine. we're right about back to where we started. We haven't gotten a fill yet. If you guys want to position a little more aggressively, maybe wait for 5 more minutes. I haven't really stared at that very hard, so you guys want to evaluate that yourselves. But let's go ahead and take a look at that, since we're looking at this particular setup. Okay, so 3 minutes and 19 seconds. We want to see these lines get oversold. Ideally, we'd like for them to remain oversold for at least 2 candles. Morgan, I think did anybody else lose me? Is everyone else still there? It sounds like Morgan maybe dropped off for a second. So I don't know if it was everyone. Okay, good. Okay, awesome. Keep cutting in and out. Loud and clear. Okay. All right, thank you. Okay, so it looks like we're good. A few of you guys caught me cutting out or something like that, so let's try to repeat what we were just talking about. We want to see this 5 minute get oversold. If I had to make an assumption here, I would say that at about 2 minutes and 15 seconds, we're going to, by extension, post oversold. If that looks convincing enough, that may be a good entry for you. Otherwise, wait for it to cycle. So that means it's post oversold, and it may take an extra 5 minutes to post oversold. If it does, then wait. Minors usually try to take the bait and go back up. Majors may very well come back down. So this is like 10 minutes from now, and then minors have to correct 15 minutes from now. And then right there where majors and minors are down, we take a long. Otherwise, the other thing that we'd look for is the majors coming down and minors coming down, and maybe you're going to maybe see some bending. And then on the next candle, or the very start of the let's see, 6 minutes and 29 seconds, you'll see majors kind of maybe angled and persisting, minors maybe fatiguing, and this would be a good indication to go long. So what we're not going to do is wait for these to turn up, right? We're not going to wait for them to get oversold and then start buying. That's ridiculous. We'd lose that position. So we want to just see them maxed out to the oversold and then jump in and go for our buy. So let's see what happens here in about 50 seconds. See if we can get some of that positioning, because we have not filled, by the way, our dirty pressure. All right, let's see. 45 seconds, so we'll wait for that. Let's look at our other setups. Actually, we're pretty close here. Let's go to, we'll keep an eye on it here. Change this to a 5 minute. No, that's not what I wanted. There we go. Okay. So see what happens in 11 seconds. We made some swift decisions here on the GJ and GU for a long position. One of them was this, so they almost went oversold on the 5 minute post. You see that? So we want them to kind of extend into the oversold, which could very well happen here, and then go long. So my recommendation would be to watch for this green line right here. If it starts maxing out on this black line right there, you may want to consider an entry right there for a long. Let's check the EU. So yeah, we're getting a little bit of digression, which will allow for some positioning. I would still jump into the long. It's up to you guys. All right, so the GBP-JPY, we had a post. So let's not look at the current candle. Let's go back to this one. And we were making the decision on what we're going to do next in this candle based on the way we thought it would post. So essentially what we saw here was majors are starting to turn up. Minors have taken the bait. But check this out. This is what really kind of stood out to me here. If you go back, you can see that they're both double crossed down, which we were due for some give back, right? Because you can see that we were overbought, right? Miners are kind of fatiguing what we're hoping to see in the 5-minute, for example, here in the next 10 minutes or so, if it lasts that long. But miners fatiguing, majors persisting. So we know we're going to get some flip back in the opposite direction, right? And we did. We got it immediately, right? Very little drawdown, flip back to the opposite direction. Drawdown there was about 1.2 pips, and then it dropped about 20 over 20 pips. So you got this double cross, and I know a lot of people this creates a warm and fuzzy, but for me, that's not always the case. In this particular case, I would have expected some continuation, but then reversal, so back to the long side. And that's essentially what we saw was some 5.6 and then back to the long side for 15.1. So majors kind of pulled back, minors continued down a little bit. Pressure was still up, but check this out. This is what stood out to me the most. And I'm going to try not to lose you guys here. But this thick orange value normally pointing down for you guys means down, and blue dotted pointing up means down as well, right? Then orange pointed down means down, right? Thick blue is pointed down, which means up usually, so we won't look at that one. But we got 3 out of 4 saying short, okay? But what I'm telling you in this particular instance is that this thick orange pointed down is actually telling us to go up. And this blue dotted pointed up is actually giving us more confirmation of the up. So I don't want to try to confuse you, so I'm not going to tell you why. Otherwise, you're going to think that you've got it all figured out and try to run with it and mess up your whole account. There's more to it than just that. But that was one indication that I used to justify at least a little bit of long. And based on a couple of other things, we went ahead and took a long. One of which is that we're already seeing, some of that pull back out of this, down right here, right? So we've been moving down, and then we kind of went sideways, and we kind of softened that down move. So we've seen more sideways. And so we expected to see at least momentarily some of that up, justified by support and resistance of about 15.3. So we only took 5 of that, which is 1/3 of, actually, if we went all the way to resistance, it would have been more like 20. So we only took like 25% of the distance between our current market price and our next resistance level against the overall trend, even though it's kind of sideways for the last, 8-10 hours here. So we took our long and we were out really quickly. So it went 5.9. All we needed was just a little bit, and we got it. And it got us out of our 5. Same thing here with the GBP USD, almost carbon copied. Majors are kind of pulling back. Miners took the bait and started to go short. Green pressure was on top, pointed up. Red was down, but green was up. And we had thick orange down with a green candle. So we're looking for a long. And we had about 15 to 20 pips of resistance in front of us. So we only took 25% of that distance as well. And you can see it's the same type of trend that we saw with the GBP USD, which is short but softening, right? So that's why we justified taking a long on the GBP JPY and GBP USD. By the way, I'd already checked our announcements. I checked trend. I had checked open, high, low closes. I did my whole checklist for all 3 of these currency pairs. That's why we're looking at these right now. I did want to see a down on USD JPY momentarily before an up, because we had green pressure pop on bottom. I could see that there's still likelihood of up right here, just because majors were not fully committed to that short, and they still aren't for the most part, right? Miners, we've already seen cross. Now majors are just crossed, and miners are already more than halfway down the channel. So, but I hadn't done any analysis on UJ in terms of trend or announcements or anything like that, so I left it off the table. Although we did see some potential for short, it's only gone 2.6, and then more for long as well. But again, we haven't done anything on that, so I'm not going to touch it. Here you go right here. Look at this, miners fatiguing, majors persisting, kind of like we thought. Barely oversold there. Black is still kind of on the threshold. Right here, this would be the entry for the long. As soon as this 3 minutes 39 seconds is up, if it looks similar to this. So that would be your entry for a long on the Euro USD if you didn't get in. Obviously, if you got in when I did, you're in a better, you're in the same boat. But if you haven't, you're going to be able to get in better position than we have, or that I have at least. So that is contingent on, of course, this readout persisting long. So we got 38 minutes and 7 seconds on that one. That would be the speculation at this particular point. Let me try to get to some of these questions here really quickly. I don't think it's on the Back to Basics video for the Proving Ground, Jeff, or rather, yeah, for the Proving Ground. But if you go into the Mastermind archives, I think it's like lesson 48. Let me double check here. Lesson 48 covers dirty pressure. I think it's called Simple Trade 1. Yeah, lesson 48, Simple Trade 1, and that's the Mastermind archives. So that's not going to be the Proving Ground Review archives. So Mastermind archives, because obviously there's a lesson 48 in here as well, right there. But you want lesson 48 of the Mastermind, Simple Trade 1, and that'll go over the dirty pressure. I think it's the first time I talked about it. You got Brent. You got to tell us why. The video for that, Brent, for Mastermind for the thick orange, I want to say, and if those of you guys that are Mastermind that are on here right now, if you know which lesson it is that we talked about, oh, right here, thick orange predictive, lesson 45. I think that's one of them. Thick orange TNT, that's another one right there. So you could probably watch lesson 40 of the Mastermind and lesson 45 of the Mastermind. Yeah, Steve, I know you guys want the answer to that, but it literally took me 3 lessons, each an hour long, to explain that thick orange, because it's very, very nuanced. So I want to say, where did I cover it? TNT basics. Let's see. Thick orange. Yeah, I probably took like 3 different sessions to explain that. If I just it would be reckless if I just gave it to you right now, because it's just going to mess you up. It's just going to confuse you more than anything. So I realize I'm already in an EU trade. I did put in a smaller lot. So right now in 22 seconds, I'm going to go long again. Because I only put in a 0.25 because I was putting in 3 trades, and I have 5,400. So I was accounting for the fact that I had multiple at a 0.25 versus something larger. So that being the case, since I'm only at a 0.25, then I'm going to justify another 0.25 for just another 5 pip here in just a moment. Let's see. So I want that to kind of fatigue. That's good enough. I'm going to jump into that one. It's going to suck if I'm wrong on both of these, huh? Right there. Okay. I'm at 5 pips there. So my new entry for that one is right there. I've got another one here. Obviously, I'm not going to risk it going too far out of the way, especially because I've got a double down here. 529, 64, 452. So I'm only going to look for about 12 pips. And then I'd be looking to do something about those, whether it's hedge or stop loss. So just in case, I'm going to put a little protection here. This is called Overwatch. It's exclusive to Mastermind members. So if I take this and I drop it onto here, then I can actually have it watch my trade. So if it gets to that level down there, then it'll just automatically hedge me, which means it'll put me into a sell trade and it'll remove my take profit. I could even set it up to price average automatically, but I don't trust that. I don't trust anything to price average except for me on the spot while reviewing indicators. But let's go ahead and put in some parameters here. So hedge top, I don't need that. 1.13725, 1.725. So it doesn't matter what I put in there. Hedge bottom, we said we're going to go at about 13. I'm just going to put 1.13515 and then I'll adjust it. 1.13515. And then minutes before hedging, let's just leave that at 5 minutes. Price average top, that's not going to matter. 13785, 1.13785. And then bottom, that's not going to matter either because I'm not going to use the auto price average. 1.13505, 1.13500. Let's just do that. Trade ID. The one I want protected is, let's just do the top one because that one's furthest away. So 174.76490, 174.76490, 76490. And then we had to increase risk here because we do have 2 trades in. Let's just do one right there, and then there we go. Okay. So now Overwatch is implemented. That means that if it gets to this line right here, it's going to automatically hedge me if it stays below that line for 5 minutes, even if it doesn't post. And then it'll remove my take profit. And if I scrunch this down, you can see that it's got my recommended price average levels and my top for hedge. So those work. Generally, I'll use those if let's say it comes down and puts me into a hedge, and then it goes back up. Well, I have these other levels that I can look at for potential price averages as well. So generally, that's how you set those with that in mind. So that being the case, this probably would have been a little higher, and this one would have been right about there, or maybe on top of these candles right here. And that would have been where I would consider taking those price averages. Okay, let's go back to our 5 minutes. So it looks like even from where we wanted to position, it still is still getting away from us about 2.5 pips right there. But we haven't done terrible thus far in positioning, where we're still counting on that long to kick in, and we've seen the opposite happen thus far. So that's good because if it does go long, obviously we're not always right. If it does go long, then it's allowed us to kind of position a little bit. Let me try to get to some more of these questions. Is it accurate to say that with our indicators, we have a distinct advantage over the rest of the miners in the market? Yes, it is accurate to say that, Steve. For the most part, primarily because we have the indicators, right? Because everyone else in the market is generally using the same tricks, right? And the more those people use those tricks, then the more the majors can use it to manipulate them, right? It's a zero-sum market. The majors have to have enough people doing the opposite thing in order for them to put in their trades going the other direction. Where are you saying the opposites with the dotted blue and thick orange? Look at what the thin orange did at the post. It popped up. Thin orange is no drag race pointer like thick orange, but he definitely helps us know if more buying is there when thick orange may change directions at the post. Let me try to. That was thick, Jaron. Let me try to wrap my mind around what you're saying there. So if we go here, so we're looking at the post or the new. Are you saying on the new candle? So the opposites with the dotted blue and thick orange. So the opposite with the dotted blue and thick orange that I'm referring to here is that you can see thick orange, dotted blue, right? Which traditionally are saying that, right? Up, up. And then here as well, thick orange, dotted blue, pointed up is down. So this is a 30-minute. I was like, wait, that doesn't make sense because I took a long trade. Hang on. Right there. Okay. Let's go back here. Jaron, for you, because we've kind of talked about this already, thick orange, blue dotted, traditionally are saying down. Thick orange, blue dotted, again, traditionally saying down. So the one indication, first of all, and this is that you've got a green candle right here. So let me give you the basic explanation. So this is one indication that the thick orange is working predictively, not reactively, meaning it's not signaling the direction it's pointed. And we can see that. I'll just show you guys something you guys can play around with. Thick orange is down right here, negative 24.24. Okay, see that value? Negative 24.24. All right. Now it's at negative 74. Which way did the market move? Up. Nonetheless, thick orange went down and lost points. Not lost points, but just decreased points while the market moved up. So it's telling us predictively there's still some buy left. Right? Same thing here. If we go back, negative 26. Value on thick orange, GBP USD. Negative 76. Thick orange down, market moved up, but it still lost, or it still decreased in value in points as the market moved away from it. So that's telling us something. This is telling us predictively that there's some long here, right? And then we combine it with what we know of other indications to justify, our position. Right now, believe it or not, I'm testing this on a 5-minute. It's not doing too bad. It happens really often, but I'm using other parameters. So when I've got that one, to a place where I could introduce it to you guys, I'll do just that. So then you said, look at what the thin orange did at the post. So just after the post, the thin orange, so if we go back, thin orange was down, and then as soon as the post happened, thin orange popped up. I see what you're saying. Yep, absolutely. That thin orange was giving us some leadway, saying, hey, there's still some room for the long there. Absolutely, Jaron. I like that. How many pips are you going for on the long? Wade, I only went for 5 on each of these. So 5 on the GJ, GU, and EU. Right now, EU is not being very nice. I've got about 4.5, or actually less than 4 pips. Yeah. Against me thus far on my EU trade. So I'm looking at, I think 7.5 was my max that's GU, sorry. 6.8 was the most I went upside down on my EU trade for a 5 pip. So it better start filling here quickly, because I don't want to take more drawdown than I took profit. 48. Yes, 48. Yes, thank you. Appreciate that. Thank you, guys. So I was asking which that may have been, and you guys were just shouting out that it was less than 48. Thank you. Oh, thanks, Wade. Thank you. I hate this, honestly. I don't like doing, especially not at this time. You guys are encroaching on my time to trade. And I'm not going to put a live trade right now. I hate this kind of pressure, guys. I don't know. I mean, like I always say, it hats off to, these other coaches that, that have been doing this for years. I've never enjoyed trading in front of other people. It's just one of my things, right? I think, and I've said this before, but I don't think I in any other condition, I don't think I have the personality for a day trader, right? Because I get anxious and I want to be quick and in and out of the trades. Luckily, we have indicators that I could kind of tailor to my approach, my risk appetite, my personality, versus having to try to fit who I am into something else. So yeah, this always stretches me in terms of like my level of comfortability, which is why I do it. I think we should all kind of stretch ourselves outside of what's comfortable. That being said, it is definitely uncomfortable. So I'm glad to be here as well. It is an honor for sure. CCM, no, they're not out of business. They're still communicating with us. They're just, the more people, go and make waves, then the longer it takes, right? Because any inquiry in that direction is going to result in, more paperwork, more whatever it may be. Let's be honest. Let's say hypothetically, now hear me out. This is hypothetical, right? This is not the case, not even close. Hypothetically, if they decided to go out of business and, ditch out, it'd be a worse situation for everyone, because it may take years to recover, some of that. But in this particular case, it's not. I mean, this is not anything we haven't seen before. I realize that most of you guys have only been here for a year, maybe less. But you can ask any of us that have been here for a couple of years. It doesn't happen often, but they're just sometimes these bumps in the roads where you got to just, ride it out. But it's definitely not something that happens often. Matter of fact, probably something like this exactly, or even close to. It's been like over 10 years since anything even close to this that has happened. And it's not like they just went out of business and skipped out, right? It's not that. It's just they're dealing with whatever it is that they're dealing with. Dirty pressure signal does not have a 90% success rate, Ryan. No, it does not. It actually has closer to an 80, but that is, of course, with testing every instance that it happens. I have reports from people and documentation from other members that have tested it to be, above 90, but that's just for the times that they trade. So if you want to figure out how it works for you, back test it. Absolutely. January 5th, 2015 to current, back test that sucker. And anything else that comes your way, that should be your guys' process. That's the process to making money. You want to be a money printer? Let me show you how to do it. Okay? It's simple. You get something, you back test it for the times that you trade, figure out what its ratio is. Make sure, obviously, that it makes sense. You cannot take a 3-pip trade unless you have a 90% win rate, because most people are not stopping their trades out, at 9 pips, right? If your stop loss is, let's just say 20 pips, give you guys a quick math lesson, because you guys already know this math, and it's baffling how you guys don't use it. It's elementary, right? It's like, what's that detective's name? Elementary, Watson. All right, look, you got a 3-pip trade. Let's say that you're trading at an 85% win rate. Let's just say 80% because it's a round number. 80%, and so and let's just take 10 trades. 8 out of 10 trades are for 3 pips. Okay, that's 24 plus. That's 24 gross pips. 2 losers, right? You cannot have even a 12 right here, which is a 4-to-1 ratio, right? 3 pips. You guys doing the ratio here? 12 and 3, 4 times the take profit, 12 pips. 1 is your 3, right? You can't even have a 12 there, not even 12 pips drawdown, because 12 times 2 is 24. So why couldn't you? Well, first of all, nobody wants to do all that work to break even. Secondly, you're not breaking even because you have commissions, and hopefully you don't have swaps in there. Otherwise, you're going the opposite direction. Nonetheless, your commissions are pulling you the opposite direction. The idea here is not to salvage your account so you don't blow it up. The idea is to make profit. This is not how you make profit, so don't do it. If you do, that's stupid. Quit pretending to be stupid. You know math better than that, and if you don't, I just explained it to you, so now you know. So don't be stupid, or don't act stupid. Okay, so if you want to trade three pips, for example, then you've got to have above an 80%, closer to a 90%, and even at that, the max you could justify is a 5-to-1, and imagine how long it's going to take you to grow an account at a 5-to-1. That means that every 5 trades, if you know, obviously you're at 90%, you're hitting 9 out of 10 trades, but that has to be mathematically and scientifically sound. It can't be for the last 6 months, right, or for the last week. It has to be for, you have to test it over the course of years, because you want to know that in just about any market condition, that's how it's going to perform. Okay, so you need to understand your basic ratios. If you don't, it's fine. I got a calculator for that. Seriously, a calculator. It makes it so simple and easy. Calculator. Let's say you've got, this is going to break everything down for you, right? Let's say you got a $2,000 account and your win rate is 80%, and you want a stop loss of 15. Okay, can you take a 3-pip trade? No. Minimum take profit is 5 pips for that stop on that and that win rate. Otherwise, the math doesn't make sense. And the lot size you can use is a 0.13. Now, some of you guys are saying, well, if I let it go 20 pips, well, then I'll win more often, so I'll be closer to a 90. I'd be missing the point, though. Okay, so if you're taking a 3-pip trade, let's say a 90%, okay, this is what I'm saying. If you don't do the math, those that do not study history are doomed to repeat it. Isn't that what they say? 1 times, okay, or yeah, 1 times, let's just say 20, right? Because you have 20. Now that's minus 20, right? So you got 7 pips profit. Okay, after commissions, you maybe break even. So let's just say you traded at a, well, what, this is a 1.0, right? So even with Capital City with CoinEx, it's 23 cents. So $2.30 after 10 trades. So for those 10 trades, you made a whopping $4.70. Holy cow. Hawaii, here we come. Right? No, don't do it to yourself. So don't, and then on the opposite end, we've got people that are like, well, I'm just going to take a 50 pip, right? Or more, and they're winning at, say, 70%. But they're going to take 50 pips, but they're going to also take a larger profit, right? So minimum take profit needs to be at least 25, but they can trade at a 0.02 lot size and only risk 0.5% of their account on a $2,000 account. So first of all, see, you're lucky because CoinEx will allow you to put in a trade that small, but some of you guys are saying, well, I'm trading at a 0.1, so I'm safe. It's like, well, no, you're actually over leveraged, because you shouldn't be justifying so many lots for such a risky trade. So sometimes you're undoing what you're trying to do. Are you not concerned about majors crossing pointing down on the 60-minute chart? Well, sometimes, yeah. Yes. But are we talking about like the GBP, JPY, and GBP USD? Were we concerned about that? Well, first of all, it happened here, which was an hour before the post that we're currently looking at, and that's not always telling us to short, right? By way of the head fake, for example, when we get major minor cross down, we're buying when we're looking at a head fake, for example. It's just a matter of knowing how to read the indicators. Sometimes it means, yeah, cross down means sell, and other times it means buy. That's what it means. That's what it's telling us. You just got to know the difference. But good question. Thank you for asking that, Bill. Looks like you might want to find that support line again, Brent. Yeah. If we're looking at the EU, we did actually. We did find that support line, and then we're currently bouncing off of it, almost to break even on my first trade, a little bit profitable on my second one. Let's see how those work out. Our positioning wasn't half bad. Mine was here, right? Some of you guys maybe waited a little longer and got in after that. The difference was about 3.6 pips, which is like more than half of the trade that we're looking for, right? So that would have been nice, because to this point, you may very well have got, yeah, you would have been out to that point, right? So that would have been nice. But here we are. So we'll continue to watch that, see how that one works out. GJ, it was from what you were showing in GJ earlier. Okay, I think I addressed that. If I didn't, Jaron, let me know, or if you have more to add to that. If you guys don't know, Jaron Rhimes has been around as long as I have. Or I mean, we basically started at the same time, and we've just obsessed over these indicators. I don't know many, if any, including coaches, that have spent as much time staring at these indicators as the two of us have. Yeah, Ryan, she's an awesome trader. She's worse than I am in terms of wanting to sit in front of people and do it for them. She doesn't even like me recording while she trades. So again, some of the best traders you're not going to be able to replicate. You're not going to be able to do exactly as they do, but you can glean from their experience, and then based on how you see the market, your risk appetite, personality, all that stuff is going to come into play. Mind you, I taught Candace everything she knows. She's never had any exposure to any other trader except me and this program and how I showed her how to trade. And she trades completely different than I do because she made it her own. That's how I trained her, was to, okay, how do you see them, right? Okay, from what you see, you need to make, we need to direct our attention in that direction. So, but yeah, I mean, I think over the years, a lot of people have asked that. But truth is that you're going to be better off figuring out what works for you. So again, back testing, right? Why would we not want to look for a sell on the EU? It's not that we wouldn't want to. It's just that we're looking for 5 pips. So we were hoping to snag those 5 pips before we got anything definitive. We're just looking for some quick ins and outs. So sometimes it's about looking at the 2 feet in front of you versus, the 24 hours or the 1 day or whatever it may be, right? Where it may overall very well go, right? Does it really matter if after we get out of our trade, it shoots down 1,000 pips? Well, if we didn't, if we had a notion that it was going to shoot down 1,000 pips, well, sure, we should probably do something about that. But after we're out of our trade and we've taken profit, who cares what it does? So we just want the 2 feet in front of us sometimes. And if you can get the 2 feet in front of you consistently, then you can be rich. Not just like a couple $100,000, like 7 figures, possibly even beyond your wildest dreams, depending on what your discipline is to your account. More money than you can ever have dreamed of making. But it's about being disciplined. A statement, not a question. Thin is like the station wagon or Greyhound bus. If he stays up, even though thick orange pops down at post, I'm still buying 5. Yeah. Okay. Yeah, I see what you're saying. Yeah, absolutely, Jaron. I like that. So he's saying that even though the thin orange is not necessarily the fastest to react when it is starting to react to some movement, a lot of times it's going to take its time in that, and you're going to still see some follow through there. Absolutely. I like that. Thank you for pointing that out, Jaron. 5 years. Yep. Yeah. 5 years on indicators. That's right. And then he says, don't worry about it. Just let the point die. Move on, Aram. So should I not live trade from these webinars? Matthew, you should use a personal evaluation, but mostly you should learn from them because that's where the real value is. If you just take my word for it, well, when I'm wrong, then you get fed nothing, right? If I'm right, then you get fed. But what is the win rate of me winning versus losing? What are you going to risk? If you took a personal evaluation and you decided whether you liked what I said or not, and then decided, sure, but that's entirely up to you, right? I can't tell you whether or not you should take a live trade on these webinars or not. It's got to be a personal evaluation. Yeah, don't put your hard-earned money in one basket. Can I have two brokers? That's right, Jack. Absolutely. My dear Watson, that's right, Brent. Who is the Sherlock? There we go, Sherlock Holmes. Yeah, Brad, 2-to-1 would be awesome for that, by the way, especially if you have. So I'll give you something that helps you out. If you get a dirty pressure to the long side, as long as that is not 0, your win rate will increase. And if you're getting to the short side, as long as the thick orange is not negative 100, you'll get an increase. If you got short and long-term bias and pressure, you could probably go 10 and 20. So a 2-to-1, 10 pips take profit, 20 pips stop. And the same currency pairs, right? EU, GJ, GU. So backtest that for the times you trade. I'd be interested to see that data, but I know it's going to turn out well for you. So I look forward to that. I believe the times where it was 90 was 6, 7, 8, 8, 9, and 10 mountain. At least that is the time I calculated. Well, Hiram gave us the time. Yeah, David, I think that the times that I gave it, that was based on UTC. So if that's, I think that's about right. That would have been for 13, 14, and 1500 hours UTC and 0, 3, 4, and 5 or something like that. Thank you for that, David. Yeah, Hawaii by canoe. That's right. And if you're involved in the trade, I think you would miss a lot of content based on being focused on the trade and not the instruction. Thank you, Wade. Absolutely. I agree. What is the difference between dirty pressure and clean pressure? Oh, a lot, Sam. Actually, it was named dirty pressure because of clean pressure. So clean pressure is using the pressure indicator laid over the candlesticks, which is awesome, by the way. Troy, one of the coaches that came up with that, did an awesome job with clean pressure. He does really well with it. The only reason we call it dirty pressure is so you can see that in my lessons I called it simple trade 1, because I was just kind of piping out like 3 really simple trades that our members could use to get into the market right away. And one of my guys came up and said, well, why don't we just call it dirty pressure? Because we got a clean pressure, so let's call it dirty pressure. And so I just thought it was funny, so we call it dirty pressure. So that's it. But the difference is, if you know what clean pressure is, and then I just explained dirty pressure today, so you know what the differences would be there. But they are different. All right, guys, it looks like I've answered all the questions. Looking at our EU trade, we're still in that sucker. We've got micro pip spreads. We're still kind of dancing around. This may take a while, especially because as we near the 9 and 10 o'clock Mountain Standard Time hours, the market tends to kind of soften. So we'll keep an eye on that. But we're going to wrap it up here unless you guys have any other questions. You do the same, Bill. Great to see you on this. My pleasure, Jesse. Happy trading, Brent. Thanks. My pleasure, Steve. You're welcome, Kyle. Thank you. Thank you for joining us, guys. Awesome. All right. You guys have a good one. Oh, my pleasure, Mary Vincent. Thank you. See ya. Rennie, my pleasure. And Russell, my pleasure. Absolutely. I appreciate you guys being here. Join us for the Proving Ground review on Wednesday nights. If you guys are not registered for that via webinar, feel free to go to the back office and register for that. For those of you guys that are on the mastermind, we'll see you guys tomorrow morning. And have a good one. Thanks.